Nationwide cracks down on buy-to-let mortgage lending as it sees landlords struggling with Osborne tax raid. The mortgage works cutting maximum LTV. Nationwide's buy-to-let arm also increasing rental cover requirements. Comes as BOFE and Chancellor keep a closer eye on buy-to-let. The property scene just got even gloomier for landlords today after the country's biggest building society announced a tightening up of a lending criteria for those wanting to take out a buy-to-let mortgage. Nationwide building societies cracking down on rental calculations and chopping at its maximum loan to value for landlords over worries about tax relief changes next year. Nationwide's Mortgage Works, the mutual's buy-to-let arm, which provides one in seven loans to landlords, is increasing rental cover requirements for 125% to 145%, cutting its maximum LTV from 80% to 75% from 11th of May. Stormier weather. Nationwide's buy-to-let arm, the Mortgage Works, is making landlord lending criteria stricter. Nationwide says the move is in response to Chancellor George Osborne's tax crackdown next April, which it believes could cause difficulties for landlords. Thousands of buy-to-let landlords will see earnings hit, as the amount they can claim as relief will be set at the basic rate of currently 20%. Some current basic rate taxpayers will also be hit, because the change will push them into the higher tax rate bracket. It will be phased in over a 4-year period from April 2017. Currently, landlords can claim tax relief on monthly interest repayments at the top level of tax they pay of up to 45%. In the past few months, the 3% stamp duty surcharge on buy-to-let properties has been well documented. However, it appears Nationwide is far more concerned about forthcoming tax relief changes. The lender said these changes have been implemented in response to the forthcoming changes to landlord tax relief, which will start to be phased in from April 2017. At present, mortgage interest is fully tax deductible. From April 2020, tax relief on mortgage interest will be limited to 20%. This means that higher tax rate payers will pay more tax as relief is reduced to the equivalent level of a basic tax rate payer. Paul Wooten, the Mortgage Works managing director, told Strategy magazine, as a responsible lender, this change is a proactive move that recognizes the need to help safeguard current rental for landlords over the coming years and in advance the forthcoming changes to mortgage interest tax relief. TMW, as part of Nationwide, already robustly assesses the affordability of buy-to-let mortgages against stress rates that are considerably higher than the borrower's existing rate. The increase in the rental cover requirement is designed to strengthen this cash flow position even further and help them withstand the impact of increased costs from new tax regime. Close eye. The Chancellor and the Bank of England are keeping a closer eye on the buy-to-let market. Landlords who have high mortgage costs relative to rental income could even experience losses because higher tax bills may exceed net incomes. According to Treasury forecasts, the tax relief changes will net almost $1 billion a year by 2021. This move by Nationwide could trigger other big lenders to follow suit. The main players in buy-to-let mortgages are Lloyds Bank through Birmingham Midshares, Santander, Royal Bank of Scotland and Virgin Money. In December, Barclays raised its rental cover requirements to 135%. Rental requirements are determined by the amount landlords pay on their mortgage. Lenders need to know that borrowers can afford their mortgage if interest rates rise. They are doing so by applying so-called stress tests and are adjusting their calculations to factor in interest rates rising to as much as 5 or 6%. Mark Harris, chief executive of mortgage broker SPF Private Clients, says some lenders have already increased rental stress rates in response to tax relief changes, but not to this extent. It is likely that other buy-to-let lenders will follow suit in domino effect. It will make it much tougher for landlords to get the numbers to add up, and careful considerations will need to be given before expanding portfolios or indeed investing for the first time. The move comes after Bank of England started to warn about the buy-to-let changes last year, which has seen a number of moves from the Chancellor to curb it. It is concerned the surge in buy-to-let could lead to a financial instability in the event of house price falls. Roughly 2 million Britons are now private landlords, collectively renting out 5 million properties. Data from Lender Paragon shows nearly 6% of households are receiving income from rented properties, a figure that has tripled since 1980s. Data from the Office for National Statistics shows earlier in the month, according to the latest house price index from the nationwide, in April the annual pace of property value growth slowed to 4.9% compared to 5.7% the previous month. However, they still hit a record high of £202,436. Elsewhere, the Land Registry says in England and Wales fell to 119